Silver's addition to the US critical minerals list has sparked comparisons with lithium and uranium. Lithium jumped from $10,000 to around $70,000 per ton within 4 years, while uranium climbed from $20 to over 100 per pound. Using these analogs, we see silver potentially reaching 144 per ounce and copper approaching $9 per pound over the next several years.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, I'm Vince Lanci. It's Tuesday, 7:46 in the AM, and this is the Goldfix Market Rundown. Today, we're going to be discussing or opining on the potentiality for silver and copper prices given their recent addition to the critical minerals list. But let's start with the homepage and the markets. On the homepage, lower right-hand side, we just sent that out to premium subscribers. You'll be able to look at that today. Top right-hand side, it's the ultimate gold market primer. That's Goldman's primer. And the market recap, our comments and analysis on Powell flipping dovish and how dovish it really is. Founders, why no data matters today. And special replacement migration was planned from last week. We were off yesterday. 10-year yields are 428 and change. The dollar is 98.17, down 25. The S&P 500 is 64.29, down 14. The VIX is 1555, up 75 basis points. Gold 33.79, up 14 on the high of the evening. Silver 38.49 on the low of the evening. Don't make too much of it either way. Copper 442, down penny and a half. WTI 64.29, down over a buck $1.12. Natural gas 275, up 2. Bitcoin down 500 at 109 and change, taking on water. Ethereum holding up at 44.10. Palladium down 5 at 1089, and platinum down 1.5 at 1339. Looks like everything industrial is getting weak. Gold, silver up 46, but well under 90, my level to be comfortable long silver, which I am. Grains are mixed. Soybean up, corn down, wheat up 2 cents. Okay, maybe there's some data that I missed. Where were we? All right, so we sent this out this morning. Are you ready for $144 silver and $9 copper? Now, admittedly, a hyperbolic headline, but it's really not a hyperbolic headline. All right, before we go any further into this, these commodities could be significantly higher or lower than the analog projections. We've created what we call a candle in the darkness. You can light your way in the darkness and figure out what the hell is really going on by using it as a reference point. US critical listing sets the stage for bullish analogs in key commodities is really the title. Silver's addition to the US critical minerals list has sparked comparisons with lithium and uranium. We are comparing. Lithium jumped from $10,000 to around $70,000 per ton within 4 years, while uranium climbed from $20 to over 100 per pound. Using these analogs, we see silver potentially reaching 144 per ounce and copper approaching $9 per pound over the next several years. Strategic recognition, government stockpiling, and lagging supply pipelines underpin the bullish case. The analog is not a forecast, but it highlights upside risks in critical minerals. Full premium analysis is in the post. Are you ready for $144 silver and $9 copper? We're going to keep the comments to a minimum because we put them in that post. But our initial reaction was this isn't necessarily bullish, is it? And because supply will come online. But it takes years for supply to come online. And in the meantime, once you list it as critical, what's the first thing that happens when you list something critical? The very, very, very first thing. All exports of scrap stop. Think about copper. Think about all the copper that China's been getting from us over the years. Silver too, I'm sure, via JP Morgan. What's the second thing that happens? Well, suppliers who have supply say, oh, if it's critical in the US, then they'll pay a higher price for it. And they hold off for a higher price. And that drives the price of Dore bars and concentrate up. So China, it reverberates down to the raw material beyond the price transparency. And so now China will probably start paying a higher price, or at least scrambling to get what they can. Scrambling's not the right word, but at least moving more aggressively to get what they can before prices are raised. There will be a lag, but not much of a lag. That's the second thing. There are several others. One other one I'll give you is um, other countries that are allies will follow suit, right? Oh, if the US is doing it, we're doing it. And we have a lot of allies. And enemies will follow suit too. Well, if it's critical to them, then we're not going to give it to them. Okay, now domestically, yes, mine supply comes on. We'll probably start mining a lot more zinc and nickel because you heat leach silver out of that. Um, but that doesn't come online tomorrow. What happens first is the government throws money at companies to do that, to mine, to explore, right? I went through this with oil. And what that does is it drives the price of, it causes inflation in the asset prices in the stocks, right? I mean, generally speaking, it's not going to happen one to one tomorrow. But then money gets committed to drilling. So you say, oh, well, the drilling is going to make the price go down. And you know what? It does over time. This is not like tapping an oil well that you already have and just throwing a rig on it. It's different. However, when the government, as they do whenever they get involved in anything, it drives the price of something up. So what the government is going to do, right or wrong, forget about money, okay, for the moment. This is about a critical mineral. We need it. So we need it. So the government will pay whatever they need to get it. Just think sloppiness. Think $500 ashtrays, right? And so they'll give money to companies, and at the same time, we'll be scouring for scrap here. So it'll start getting bought up, right? And then they'll start spending money to drill it. It become, how's this? It essentially becomes a subsidy for the industry that makes its way into the actual commodity itself. So when soybean prices were low, we put in a floor, and that subsidized the farmers. Well, eventually that makes the price go up because, well, because of a lot of reasons. Now, here's the kicker. Where's the puck going to be? Where's the puck going to be? Well, I got to bring up mercantilism. Well, why do I have to bring up mercantilism? Because it's directly how mercantilism manifests. You're JP Morgan. And generally speaking, forget about their involvement in silver. Just pick any big commercial bank. How do they make money? Well, they make money through globalization. They make money off of money. They make money being intermediaries and brokers or vampires, depending on how you're looking at it. But when there's a signal from the government to hoard, stockpile, acquire commodities, the banks become, wait for it, merchant banks, mercantile banks. They start deepening their ties in the commodities themselves. They become trading firms of physical commodities. So JP Morgan starts making deeper ties with countries that have commodities, okay? Because the merchants bridge the divide when the governments won't talk. And so the merchant, you want to look up things like, what's a merchant banker? A merchant banker crosses international lines to get commodities to procure them for his government. And so all this has already been happening over years. You know, JP Morgan was getting scrap, scouring the earth for China. China was buying it under the radar. They didn't want a higher price, right? Well, now we're kind of forcing their hand. We're kind of forcing their hand. Now, so the banks become merchant banks, more commodity oriented, right? And then now I'm skating to where the puck could be. I'm not sure it'll be here. What happens to SLV? Well, SLV, remember, we're hoarding, we're stockpiling. SLV goes from being a place where allegedly banks use the silver bars for dual purpose. You know, this is for SLV, this is for my vault, to a place where I can buy SLV and it will put more silver or copper, whatever the ETF is in there. So it encourages me as a custodian. It disincentivizes me to short and incentivizes me to buy. Why? Am I speculating? No. The government wants more silver. The government says to you as a bank, we need more silver. will subsidize you. So you start covering your shorts, you start buying silver. I'm not saying it's going to happen tomorrow, but that again, that's where the puck may not even ever get to. But just keep in mind that all these structures and market structures that I have bemoaned for decades, they flip in purpose. They don't change them or eliminate them. They flip in purpose and they become tailwinds instead of headwinds. Anyway, so we'll see. My conservative estimate is 100 for silver in 2 years. Again, it's a projection using simple analogs. Okay, uh, lithium was aggressive and uranium was a little bit slower. Looking at that truncated picture there, I believe copper would not have the price projection that silver would because it's a slower moving. I mean, I could be wrong about that, but anyway. So there you go. You could read the whole article. It's all in there. I think I have a graphic to show you. Oh yeah, I did a little AI graphic there. Critical metals upside. Silver added to the US critical list, joins lithium, uranium in strategic status. Historical analogs, lithium up 7 times, uranium up 5 times at peak. After designation, projections, silver could reach 144 an ounce, copper $9 a pound. I'm not a technician, I'm not predicting, I'm saying this is the analog. Do your own work. That is my initial work, quite literally done on the back of a napkin last night. Moving on. Related post, breaking silver platinum. Oh, I put platinum in. That's wrong. I think platinum was already there. Added to critical minerals list. Also, copper. Copper was added in 23 to the Department of Energy. And in 25, it's added to critical minerals. So we're watching it from both points of view. Why Powell may cut 50 basis points in September. We feel pretty strongly about that. It's not our idea. We like where it's coming from. It comes from actually Zero Hedge and Goldman Sachs separately coming to the conclusion that revisions may really be a problem. Department of the Interior releases draft, et cetera. That's the whole thing there. Founders first look. We have some access to excerpts from a report by Deutsche Bank, which is fascinating. It's not revelationary, but it's fascinating because they go through the two bottom line bullets are number one, as much as 80% of the gold being bought is not being reported to the IMF. That's massive. And the second one is they see legally, they're doing legal explorations of other countries are looking more into the risk, more feverish, more urgently into the risk of getting their assets confiscated like Russia's was. And all that's doing is it's making them look to diversify out of gold even faster. So non-G7 countries I'm talking about. And founders, China stocks, and US gold. One of the things you're going to start seeing, I mean, you're not going to see it tomorrow, but this is the trend over the next 10 years. If you're long gold because you know that China, if you're long gold solely because China's buying it, then don't lean on that forever. Over the next 5 years, China needs to grow its own economy without our help. Let's assume that they're never going to talk to us again. Cold War 2.0 in full bloom now. And with that, they have to nurture their middle class while we're killing our middle class. They're nurturing the middle class, right? So gold goes up, they make money, they encourage their people to put gold money into stocks, they encourage their domestic economy for investment, they take their gold and they finance it like they finance their housing, and they refurbish their economy, then they spend on social safety nets domestically. Believe it or not, they got a shitty social safety net after they got rid of the welfare state. And then they're also going to encourage people to buy goods. And if you think it's going to be American goods, you're out of your freaking mind. Coming soon, lots. This week is PCE, and that's on Friday. GDP first revision on Thursday. We're not going to do the charts today. As I said, I have to catch up on some things. Please read that report that we sent out. That's your starting point. Is it more or less? I don't know, but that's your starting point. I'm Vince. Have a great day.
Well, thank you, Vince, for another great show this morning. And thanks to you at home for joining in and watching along with us. Always nice to have you here as Vince gives us the latest on the gold and silver markets. And hope that was helpful and that your day's off to a great start. And also, real quick, before we wrap up, I did want to thank today's sponsor, who's Dolly Varden Silver,
who is advancing one of the largest high-grade undeveloped precious metals assets in BC's Golden Triangle. And we actually had the CEO of Dolly Varden, Sean Kunkun, sit down with the great David Morgan to record an interview where David took a closer look at the company, which will be coming up later this week on the channel. Although, let's give you a quick snippet of what Sean had to say to David in that one.
I think there's an opportunity to create a big silver company. Okay, there's only 10 primary producers, right? That the market cares about, and that the market and a lot of those companies, they don't even produce that a lot of silver.
Right.
Most of them are producing lots of gold and lead and zinc, and so what I'm trying to do, my goal with Dolly Varden is creating a vehicle for investors that is going to give you exposure to silver, and just trying to do smart business deals along the way. We did a slew of acquisitions in May where we bought things from companies that were distressed.
Well, thank you, Sean, and thank you, David. Certainly nice, especially coming out of a mining stock bear market, where one of the questions I heard most often is, are any of these companies going to pick up some of these assets while they're at discounted pricing? And that's one of the things that Sean has been doing. And he also talked more about in this interview, which will be coming up a little bit later this week. But thanks to Dolly Varden for bringing us today's show. And thank you at home for watching. Hope you're having a great day out there, and we will see you again tomorrow.